as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Building a solid financial strategy is a core element to enjoying your retirement years. That's why you need advice that you can count on. At the Armstrong Advisory Group, we understand the challenges of positioning your assets to help you maintain your wealth over time. Our goal is to offer advice that is both suitable and in your best interest. When you hire one of us, you hire all of us so you can be comfortable knowing that every advisor in our firm is dedicated to helping you create a realistic plan for your later years. Visit us today at armstrongadvisory.com and sign up for a free, no-obligation planning session. Click the Get Started button at the top right corner of the homepage, and you can select the day and time that works best for you. Go to armstrongadvisory.com and let us help you secure your financial future. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Happy Tuesday, and I don't know when summer actually begins, but it begins today for me
this weekend
with 85-degree weather out there. Hope everyone is having a lovely, bright, and sunny Tuesday here in New England. I know there are some storms sweeping across the Midwest as we speak, so if you're listening from there, good luck, buckle down, and we're thinking of you. But we continue a week here where we're sort of in between data sets, and my question for you, Marc Fandetti, is of the 12 Federal Reserve speeches going on this week, which has you most excited, Marc?
The one that's not talking right now.
Yeah.
I think is the one
Look,
Fed communications, they're a key policy. I'll be very serious right off the bat.
Okay.
I know you're being sort of tongue-in-cheek.
Yep.
But they talk for a reason, these folks. They're trying to keep inflation expectations anchored.
And why is that important?
Because inflation expectations, and this is born of the experience of the 1970s, the realization that inflation expectations are a key component of the process, so to speak, of inflation was born of the experience of the 1970s. Higher expectations feed into our wage demands. They feed into the prices charged by firms. What so people couldn't figure out in the 70s...
Give me a simple example of why high inflation expectations could lead to more inflation.
You think prices will go up, therefore you ask for higher wages. You think prices of your inputs will go up, you're a firm, therefore you raise prices in anticipation of having to place an order with your suppliers.
Yep.
I alluded to the 70s because the puzzle then was, why is inflation still high if unemployment is high? Stagflation was coined in the 70s to explain this new phenomenon. It wasn't a word before then because we'd never encountered that before. Prior to the 70s, the formula for beating inflation back was pretty straightforward. You raise interest rates, you kill economic growth temporarily. It's sort of like chemo. I hate to use the analogy because this is a personal subject for a lot of people, but it's like chemo for the economy. It's terrible when you're going through it, but you need to. That's how a hike in the Fed funds rate is supposed to work. But in the 70s, it didn't work that way. We had high unemployment and recessions, and it didn't kill inflation. Why? Well, expectations were blamed. So since that decade, economists incorporated them into their models. So the reason the Fed, fast forwarding several decades now, getting inflation under control in the 80s and 90s into today, the reason we didn't have an outbreak of inflation, many people think in the very late 90s, was in part due to expectations becoming anchored. And one of the reasons inflation didn't go down by a lot in the early 2010s when the economy was in the doldrums was because many economists think, led by Bernanke, former Fed Chair Bernanke and others, that it's because expectations were anchored. So expectations are what these Fed speakers are trying to manage with their incessant chattering. I just wonder, and this is a question for you and Tuck and everybody listening, are they succeeding in keeping expectations anchored? I don't know.
I guess inflation expectations have come down considerably. It's just a question of whether that's a result of their speaking or the actual inflation numbers coming down. It's a reasonable question. I have perhaps a more provocative one when it comes to the Federal Reserve, which is only provocative in the circles of economics. But if your job as a Federal Reserve voting governor is in part to be, would the term fiduciary of the overall U.S. economy be too strong a term?
I've never heard that, but I kind of like it.
Your job is to, with a very limited subset, act as in the best interest of what you believe is for the labor market and inflation.
Yeah, I like that.
So, therefore, if you are one of these Federal Reserve governors and you are attempting to bring down inflation expectations, and let's say you're not terribly worried about your future credibility, because that would be a prerequisite to this, wouldn't there be an incentive here? Wouldn't it maybe be in the best interest of the economy to lie about your personal beliefs of the future state of inflation and say that you believe it's going to come down and these are the reasons why? Like how? Where are the incentives lined up here for these?
There are researchers who've. This isn't quite the term to describe it, but there's a vein in the research that talks about time inconsistency or dynamic inconsistency. As a policymaker, you say one thing today, but you're going to do something else tomorrow. One example of it is, I say I'm not going to tax this particular, I'm not going to tax Roth IRA money today to encourage people to save a lot and increase investment, and then tax it tomorrow when the money's there. Fed policymakers do have a time inconsistency incentive. This isn't quite what you meant, but it's the closest thing I can think of in the research literature that kind of captures this. I'll just call it, it's not necessarily bad faith. It's just sort of changing incentives. So yeah, policymakers might have an incentive to say something today, knowing they might not want to follow through on it tomorrow. They're so aware of time inconsistency, though, this problem we're talking about, that it may have caused them to wait too long to raise rates in 2022, because they said, hey, 6 months ago, we were telling everybody rates weren't going up to, remember that, till 2024. This was supposed to be the first year of rate hikes, according to the Fed, in 2020, 2021, according to their thinking at that time.
Turns out.
So they were so wedded to the idea of being consistent that they made a mistake. So you can over adjust to this problem too. I know it's not quite what you were saying, but it's the first thing that sort of came to mind.
So in any case, as I mentioned, you have a number of Federal Reserve members speaking. You will likely hear highlights printed in the Journal and Bloomberg and CNBC and Fox Business all over the place in terms of what they are talking about. But what they're going to be talking about is generally the same thing, which is they were all a little bit surprised about the resurgence in inflation, but not terribly. It was a bit of a bump, and to continue to see inflation come down, and that most importantly, that the Federal Reserve has the tools to control inflation in the future.
How are going to deliver? Ordinary people, you, me, everybody listening, how are we supposed to interpret contrary statements from Fed officials? I know they're just being transparent, but for goodness sake, Larry Summers, the great former Treasury Secretary, no, not everybody thinks he's great, I do. He made this point last week. He's like, Supreme Court justices, other than in dissents, they don't tell you what they're thinking on the fly. You could get if you listen to oral arguments and stuff, you can get a sense for it, but only the Fed feels the need to share what's on their mind every day. I think it's really hard to reconcile contradictory statements. I find my head spinning when I listen to wire reports of what this or that Fed official said. They seem to contradict each other. What does that mean for policy? It confuses me more than it enlightens me.
Yep, I'm right there with you. I suppose if I'm the Fed, perhaps they are trying to get across that they are an actual independent body. They are not just some political organization that bows to the whims of whoever's in charge. But I agree with you. I think more than anything else, they probably spread a little bit more confusion. In terms of other things going on this week, other than just the Federal Reserve speaking, we will get meeting minutes from the last Federal Reserve meeting on Wednesday. We'll be getting tomorrow, that is, some existing home sales data. Initial jobless claims have been in the news recently, so Thursday that data is going to be coming out. These are the weekly filings for unemployment. And then on the earnings side, it is a continued pretty big week, especially for the retail sector. You had Lowe's report this morning. Macy's as well. We'll be reviewing that later in today's show. And then tomorrow, the big story is Nvidia. I believe they saw another big surge in the NASDAQ yesterday. We're talking about a $2.3 billion company at this stage. They'll be reporting after the bell, but also TJX and a few other companies reporting in the midst of all of these Fed speeches. Let's take a look at markets right now. You do have a mixed market at the moment. The Dow is up about 57 points. The S&P and NASDAQ both down. S&P basically flat, down 1 point or 0.2%. And the NASDAQ off a little bit more than 1/5 of 1% as we enter into early trading here. Let's take a quick break, but when we come back, I want to talk a little bit about volatility. Goldman citing some data saying that investors are bracing for it. What exactly does that mean when Goldman's citing this data? How do they know that we're bracing for volatility, and what should the ordinary investor be thinking about as we head into the spring-summer season here? Quick break. We'll be right back after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Mark, I mentioned it's a week of relative calm, at least in terms of economic data that's coming out. We did have the CPI report come out last week, which sent markets into a all-time high with the Dow crossing 40,000 and has been bouncing around there since then. We've had yields kind of settling out here. The yield on the 10-year Treasury today settling down at about 4.4% as perhaps the initial excitement about inflation easing has waned a bit, but Goldman pointing out one area of the market that they're seeing increased bets on, which would be the CBOE, Chicago Board of Options Exchange volatility index. It's a signal that attempts to measure implied volatility in the market. And what exactly might Goldman be reading here when they're saying, hey, investors are bracing for the return of volatility?
I assume they mean elevated VIX or some. The VIX has passed through some. So the so-called VIX is, and I get out of my depth very quickly here. So I've always thought of it as you said, an implied measure, which means we don't observe expectations for volatility directly. You don't go out and poll investors and say, do you think stocks are going to bounce around more in 30 days? And they're bouncing around today.
You could, but that's not what this does.
You could. No, it isn't. So a quick way and a cheap way to do it is to infer it based on what people are paying for the option to buy stocks 30 days from now. I'll just lay it out as simply, again, consistent with my understanding as I can. So we've got these options markets that people trade in actively. You can use those to infer how they think stocks will be performing in a volatility or risk or spread around their average, to give the technical definition. You can infer those things from these options. So that's what VIX is. When so-called VIX goes up, and I forget, is VIX an acronym? Or is it...
volatility something or another.
Yeah, okay. It's just not something it's not part of our toolkit as investment professionals. Here, some people trade the VIX. We don't, but you keep an eye on it because it generally coincides. It's generally a good predictor of an uptick in volatility for self-fulfilling prophecy, probably reasons.
In any case, what Goldman measured here was that options bets on the VIX, which you can imply to mean that people are betting on volatility, particularly market declines, right? You can buy options on the VIX that if it hits certain levels, they pay off. That's how you generally trade this type of thing. And their measures of this say that, risk appetite hit its highest level since 2021. Perhaps in response to that, people are hedging against some of that risk and buying downside options on volatility. I don't know that any of this tells you much of anything about the direction of the market, by the way. Like people buying hedges against the overall market performance is something that generally does happen when things like 40,000 gets crashed through on the Dow or markets reach an all-time high. So I'm not sure that there's anything really to this. And by the way, measures of risk hitting their highest level since 2021, nobody should read that as something like a bad signal. Does anybody remember how 2021 ended? Because I think it was pretty darn good. So do with this information what you will, but I don't know that there's anything. I haven't seen anything reliably that says, oh yeah, when options bets on the VIX go to this certain level, then you can rest assured that this is going to happen next.
I think you need to keep in mind that institutional investors, particularly those who work for what used to be called investment banks like Goldman. Goldman is now technically an actual bank.
Two.
They have, what's that?
It's an actual bank too. It has an investment bank too, right?
Oh, I don't know. Do they still even talk about? I'm talking. Do they still even refer to? Does anybody call them investment banks anymore? That's why I
don't know.
Qualified. I don't know.
I thought so. I thought all the 22-year-olds who got the jobs at investment banks were pretty excited to tell people they're working at investment banks and put it on their business card.
In those circles. So their objectives are different than yours and mine as long-term, say, retirement-oriented investors. I welcome market volatility as a long-term investor. It's the reason equities historically, according to finance theory, because we can't come up with a better explanation, it's the reason stocks have outperformed bonds by several percentage points over long time frames. You get compensated, if you like, for the excess in volatility delivered by stocks relative to bonds. So we need that volatility as long-term investors. Shorter-term investors with so-called investment banks, they're indifferent to long-term performance. They're trying to make money off of, say, short-term zigs and zags in fancy things like options on the VIX.
I think whenever markets reach an all-time high, which they've done several times this year and have done several times over the last several years, right? We've been in a prolonged period of time where we haven't had a deep recession since 2020, and even that one was short-lived. You see, I think, some abnormal behavior sometimes, right? Some get extremely optimistic, some get extremely pessimistic, and I think the key takeaway for me whenever we're talking about either an all-time high or new reasonable lows in certain periods of time is, should any of that significantly change your outlook on the future, right? Like, does anything about this moment in time change something for me, the individual investor, where I need to reshape my investment portfolio? And this goes back to a theme that we talk about all the time, which is not playing somebody else's game when it comes to your own investments and your own financial future. But, right, like just because the volatility is hitting some new gauge that Goldman Sachs identified, or just because the Dow hit 40,000, does that fundamentally mean I should be shifting something in regards to my overall investment thesis? Or do I continue doing exactly what I've been doing?
Yeah, it's a good question. My response, and yours is probably more valuable because you actually work with individual clients. But if it happens to coincide with a fork in your personal road, like I'm retiring this year, stocks are really pricey relative to historical averages. Does that mean they're going to crash? Not necessarily. Have pricey stocks always preceded a crash? Usually, yeah. So
Sure.
They're flashing some red warning signals. Do I want to downshift my aggressiveness? Mm-hmm. Do I want to reduce the amount of risk in my portfolio? If you're retiring this year, the answer could be yes.
That was actually, this exact same situation came up yesterday with somebody that not facing retirement, facing a healthcare issue that could prove to be costly in the future. And, I repeated to them pretty much the same exact thing you said. Like, we shouldn't be making a change just because markets are at all-time high. We shouldn't be making change because it's an election year or not an election year, or I love the president, hate the president, love the president-elect, whatever it might be. Like, all of those things, in my view, were pretty irrelevant to their financial future. The one that was relevant was, oh, yeah, you are now at this, because of your medical diagnosis, you're now at an increased risk of some very heavy expenses. And so based on that going on in your personal situation, what needs to be updated based on all of that? And I think, to me, that's the answer is, if you are making a bunch of changes to your investments or your allocation because of something going on in the national political world or the market world in and of itself, you really have to be asking yourself, what advantage do I have over Goldman Sachs, over Jamie Dimon and JP Morgan, to say that my moves are going to be so much better than theirs that I'm going to get this right? And I think most people, when they put it that way, will admit to themselves, oh yeah, I probably have no advantage whatsoever over those guys and women. Instead, it's, oh yeah, this is happening in my life, and therefore this is the appropriate reaction to it, or not. That's where I land whenever I'm talking about somebody making a dramatic change. I guess the only other caveat would be, if you've been doing something wrong for the last decade, then that might be another good reason to make a change. But you have to identify what you've been doing wrong for the last few years.
Markets have returned much higher than their historical average over the last several years. They're already up nearly 12% this year. I'm talking about the S&P 500, a proxy for the broad U.S. stock market. If I were going to experience a major change in my, I'll just call it lifestyle, like switching from work to retirement or something like that, or if I just had a major health event that called into question my long-term earnings power, I might have to retire sooner than I thought, I might take the money and run at this point.
And that could be appropriate.
Not obviously sell out of a risky portfolio entirely, but reassess my level of risk, because you can control that. You can't control returns. Cannot, I should say. You can control how much risk you're taking.
Markets remain in mixed territory. We're going to have a full update for you next in Wall Street Watch. Stay tuned.
Like us on Facebook and follow us on Twitter at TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Proper estate planning is crucial to you being able to enjoy your later years. And it may be the difference between retiring comfortably or living under incredible financial pressure. Creating an estate plan can be a difficult process if you aren't working with an expert who will make sure that your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and they have a new guide out this month called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may help you correct an issue that could come back to bite you in the years to come. Call right now, 866-848-5699, and get your free guide today. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
One day after the NASDAQ hit an all-time high, markets today are really doing nothing as Wall Street digests more first quarter retailer earnings and also await meeting minutes from the Fed due out tomorrow afternoon. Right now, the Dow is up by 51 points, S&P 500 is up by 3 points, and the NASDAQ down by 6 points. Russell 2000 is off by about 0.25%. 10-year Treasury yield, that is down by 2 basis points, now at 4.41%, and crude oil down by 0.75%, trading just above $79 a barrel. Macy's reported better than expected earnings for the first quarter ahead of the opening bell this morning. The retailer also upped its full-year outlook, citing its turnaround plan as a driver for strong results. Macy's, however, down by 2%. Meanwhile, another retailer in Lowe's posted first quarter earnings this morning, exceeding earnings and revenue expectations. Lowe's did note that it saw its do-it-yourself customers cut back on higher-priced discretionary purchases. The home improvement retailer also affirmed its 2024 outlook. That stock down by about 2.5%. Elsewhere, shares in Palo Alto Networks down by 4% after the cybersecurity company posted mixed quarterly results where its current quarter guidance came in line with forecasts, but its total billings missed expectations. AutoZone down by about 2% after its quarterly revenue missed analyst forecasts, and Peloton down by 16% after the struggling fitness company said it plans to begin a global refinancing process and refinance its debt, gaining access to nearly $1.4 billion in credit. I'm Tucker Silva, and that's Wall Street Watch.
Mark, you can recategorize my comments if you don't agree, but when I think about the utility sector as a whole, I generally think of a highly regulated industry without a lot of competition, whose profits are more or less capped and bottomed by state regulators. And so, in terms of sectors of the economy, tends to be one that, is not subject to massive swings. I would come to expect that was challenged a little bit back in 2019 when Pacific Gas and Electric let half the state of California on fire and ended up declaring bankruptcy. So this does not apply across the board, but that's kind of how I've come to think about the utility sector as a whole. Do you think I'm way off base on that categorization?
No, it's boring.
Yeah, boring. I think boring is a good word. And boring's not necessarily the worst thing when it comes to
boring's not bad.
Parts of investments. But as I think the Wall Street Journal today, pointed out, the utility sector as a whole has seen a 18% surge over the last 3 months. Certain companies within that utility sector, such as Texas-based Vistra, has surged 138% in 2024. What the hell's going on here with utilities right now, Mark?
Seriously? I have no idea. I look at things at a sector. Sector's the most granular I get. Is it interest rate? The possibility that rates will come down? They're rate sensitive. Think of utilities as more on the more toward the bond side of the spectrum than, say, tech companies. So I assume it's the whole sector you're describing. So it's something systemic. It's not one company's idiosyncratic issues.
So I'm sure it's a culmination of factors, but one of the things that's getting written about right now, which fits into the theme of the year, seems to be that investors are getting excited once again about artificial intelligence. Now, you might be asking, why would I invest in a utility company if I'm excited about artificial intelligence? And the answer seems to be the massive amount of power that these systems demand. So according to Citigroup, data centers could account for about 10.9% of overall U.S. electricity demand by 2030. That's up from about 4.5% today. They're going to get there not by you, me, and everybody else demanding less electricity would be my guess, but rather just that entire pie needing to grow substantially to support these upcoming data centers, as well as semiconductor fabs and all sorts of different types of power demanding industries over the next few years. And that seems to be the bet that is getting played at right now. I would challenge that narrative slightly. I think it's tough to really know a decade from now what power generation is going to look like and which companies are going to end up winning the majority of that new gain. But that seems to be the bet that's been playing out over the last 3 months. I would also point out, Mark, I would imagine that if an investor has been out there looking for some sort of value this year, and value I would generally describe by companies that are defined by slightly lower PEs on average, I would imagine the utility sector was a place to go earlier this year.
Yeah, in that regard, utilities are a little cheaper as measured by the price to earnings ratio. I'm looking at trailing 12-month PEs here to put some bookends on the idea. There are 12 sectors in the S&P. This is S&P's
own grading of it.
Taxonomy or whatever you want to call it. Others break up the U.S. market differently. We've got energy, financial services, utilities, consumer cyclicals. You've all heard these names. Consumer defensives, real estate, healthcare, technology. Technology stocks are the most expensive on a PE basis. Not surprising.
Nope.
You're not buying today's earnings. You're buying hope about tomorrow's earnings. Their so-called PE on a trailing 12-month basis, it's important, I think, to qualify with that, is about 34.5.
Okay.
Though on the low end, and this is typical of energy companies to reside at the low end, this is oil and other stuff. Just think energy exploration and production, the big names there. PE there is 10.6. So again, you got a high of 34.5 for tech, a low of 10.6, trailing 12-month PE. Utilities is toward the very low end at 14.1. And that is characteristic of utilities, which, as we talked about, are supposed to be boring. The problem with the AI, now I a little bit sarcastically said, I have no idea what's going on with utilities. And it's true, I don't, nor does anybody else. Narratives are nice, but they're just bedtime stories.
Yep.
The fact is, there's an ebb and flow to sector out and underperformance. Utilities are among the better performing sectors in the broad market this year after years of lagging. It could just be a little bit of, I don't like the term, but I'll use it, a little bit of reversion.
Yeah, very well could be. We've had several years. And I think, again, the story that continues to dominate markets continues to be AI. And I think the longer that story gets, the more people are going to be looking for answers, right? It can't just be Nvidia forever, would be my guess. If you're really trying to play the artificial intelligence trade, then you are going to go start looking for who the next big beneficiaries are.
You know what would impress me, Mike, and I know we're up against a break here briefly. Show me the analyst who, before utilities started rallying, cited AI as a catalyst. Maybe he or she is out there, but I suspect, as usual with finance journalists and finance types generally, trying to get people to buy what they're selling.
A result happened, and then the story comes after.
It happens. It's like attributing something to Zeus. I mean, these people, fantasies are their stock in trade. So show me the analyst who predicted this. Then I'll be a little bit more impressed and assign it a little bit more credibility. Otherwise, could just be random.
Let's take a quick break. When we come back, Sarah Foster from Bankrate joining us to talk to us about a new survey done on what it means for Americans today to be financially successful. Is it that new Rolex or driving a Maserati? We'll be joined by Sarah Foster next here on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Joined now by Sarah Foster with Bank Rate. Sarah, good morning.
Good morning. Thanks for having me.
Thank you for coming on. Key insights from your latest financial success survey. You want to sum it up for us, and then we'll get into some of the details?
Yeah, I think the main takeaways are that it's not necessarily being a millionaire, having enough money to quit working, the ways that Americans define financial success. Actually, Americans say that if you're living comfortably, not worrying about money, prepared for the future, and not having debt, that is the sign of financial success.
Would seem to me you have to be a millionaire or close to it to enjoy most of those things, though. Are people just not quantifying it, you think? I know this is a little
Well,
bit
it
off
is-
topic, but I mean, don't you need a certain amount of money to do that? And it's probably close
It
to
is
$1
an
million.
interesting point. We in our survey we asked respondents to only select up to three. And my thought was, maybe we're going to get the majority of Americans mentioning being a millionaire as the sign of financial success, because maybe that really is the way to living comfortably, the way to not have debt. If you start with that much wealth, it probably helps you in a lot of other ways. But I think there's really two ways to look at it. Number one, it's not necessarily that we wouldn't probably say a millionaire isn't successful. Actually, it probably is that financial success happens a lot quicker than it does. It can happen a lot quicker on your path to being a millionaire. But the second way of looking at it, I would say, is high inflation has really made it hard for Americans to feel like they can live comfortably. We also know they've taken on more credit card debt as expenses have risen. And it might lead them to say, forget being rich, I would just aspire to be comfortable.
Yeah, but high inflation makes it a lot easier to become a millionaire, right? Price levels doubled in roughly the past, I'll call it 30 years.
There is a true notion,
being silly.
too. I think that you could probably say that another maybe theory why so few Americans are saying being a millionaire is a sign of being successful is because maybe being a millionaire is not as wealthy as it used to be.
What about, yes, right. What about differences across generations? Do some of these results hint at growing divides and, say, values by age cohort?
Yeah, well, surprisingly, we didn't see that big of a difference among generations. Everybody, Gen Z, millennials, baby boomers, Gen Xers, mentioned that the top sign of financial success is living comfortably. But those second and third spots were where I think it got interesting. Gen Zers, for example, mentioned that buying their own home and owning their own home is the sign of financial success. It was the third most common achievement. And then, of course, millennials and Gen Zers were also seeming to be more interested in owning their own business as a sign of financial success, as opposed to Gen Xers and baby boomers.
Mike Armstrong?
Sarah, this is Mike. I have a theory here. Do you see any sort of pushback on what I'm going to deem hustle culture, which, to define briefly for anybody listening, like, I feel as though every time I log into LinkedIn, Facebook, or just about any social media page, it's all about these 10 tips to make you a millionaire, and look how I earned $20,000 in a month doing this, that, or the other. I don't know about you personally, but I am just flooded with these types of stories that I find obnoxious and in many cases kind of obtuse. Is there anything to that, do you think? Is social media just kind of overwhelming how we think about wealth these days and financial success?
Yeah, you're definitely right. I think there's really been this change in perception and how especially younger generations regard their careers, especially after the pandemic. I think that could be why so few Americans across generations mention that the sign of being successful is having a high-paying job or advancing in their careers. And maybe that pushback to hustle culture is partially why so many younger generations seem to be interested in going into business for themselves. But social media is really important to watch. We have a separate survey at Bankrate that looks at what factors influence Americans' mental health more than any other, and it's always money at the top of the list, which leads me to question whether Americans can really ever be in this situation where they're not worrying about money.
Sarah Foster, Bankrate, thanks so much for joining us. Great data, great insight.
Thanks for having me.
I'll tell you, this actually, I didn't think I would go there with this, but this does actually fit in pretty well with something that I feel like we bring up all the time, which is, you're asking a lot about becoming a millionaire, and I think I've pushed.
That's what the survey was
right,
about.
right. Like, the sign of financial success is not being a millionaire anymore, and I think that's kind of a point that I have made too, which is I've met with people that have $5 million saved and are in terrible financial health and not financially successful, in my view. I've met people with less than a tenth of that who are perfectly financially well off, paying all of their bills, and it's not because they received some massive inheritance. It has everything to do with lifestyle and how they are defining their own success.
So the title of this could be Live Within Your Means.
Right?
Stupid. I could say I
live
don't work
within
with
your means,
clients.
stupid. Yeah,
I don't have the best bedside manner. That's why you don't let me talk to clients.
That
might be how I sum it up.
Yeah, I mean, I think there's really a lot to that, and everyone reads these surveys from Fidelity and Vanguard about how many 401k millionaires there are that are out there, and I have to say that I just think that is a completely irrelevant factor. That number might need to be tenfold if you live in parts of the country. That factor might need to be 1/20th if you live in different parts of the country, and it really just depends on how you yourself are defining financial success. And so I get asked this question, like, am I ahead of the curve? Like, do I have enough? What do you see on average? And I always push back on it. I say, average is irrelevant. Average is completely irrelevant to your personal situation, and how you are going to define how much money you need is going to be what's actually important to the success of your financial plan. But it is important to measure that. It is important to know, because one person's 1 million might be another person's 200,000, might be another person's $100 million to make them financially successful. And if you have questions about how much you are needing to accomplish, how much you need to save in order to meet your own financial goals, give the folks at Armstrong Advisory Group a call. We'll help you assess that number. What's your magic number to make your retirement plan work? And the number's 800-393-4001. Again, the phone number for the Armstrong Advisory Group is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark, state of Massachusetts, is about to go on a spending spree because the millionaire's tax has already generated
those sober No. They spend our money as prudently as I would spend it myself.
The millionaire's,
I don't believe you.
The millionaire's tax, which assessed an additional 4% income tax rate on incomes over $1 million. That's whether it's a household or an individual. Any tax return with income over $1 million is being assessed this 4% new rate, bringing in $1.8 billion already, well ahead of expectations, about $800 million more than Governor Maura Healey and state lawmakers planned to spend from this revenue in fiscal year 2024. By constitutional amendment, the only things that this money can go towards are education and transportation initiatives. So we'll see what they end up doing with this, and the capital gain, the excess revenue has to go to the state's emergency savings account. But we will see where this goes in the new year. I continue to say I'm not willing to quite eat crow on this yet. If these numbers keep up for 3 years, then I will. But I've been kind of on record saying that I think this tax is going to be largely unsuccessful because of how easy it is to move from Massachusetts to elsewhere.
This is where the public sector differs from the private sector. Should this policy, therefore, be deemed a success? What was the objective? The objective was to transfer wealth from wealthier people to less wealthy people. There was no revenue need at the time.
In year one, if you're a lawmaker, yeah, or anybody, I think you have to define it as successful for them.
My point is they didn't have an objective. This is an accident.
Quick break. A lot more to cover in the second hour of the Financial Exchange. We'll be right back.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the biggest assets that any family owns is typically the primary residence. How do you have to navigate how to leave that to the next generation?
Well, sure, and important because unlike, say, a bank account where you can leave a child as a beneficiary, that's not really possible with a home. And so, sometimes at least having just a basic estate plan, which according to a report from lawdepot.com, 73% of U.S. adults don't have a documented estate plan. But, that's the starting point here, is developing an estate plan for your assets after you go.
Other things that you got to keep in mind, I think, hey, if you have multiple children, is there one that wants to inherit that home? And how do you balance that with the other assets that you might have so that children are being treated fairly?
Yeah, there's all sorts of concerns here, right? As I age, what if I end up in a nursing home? How do I protect some of that stuff? And let me just tell you, it is an area that has a high propensity for mistakes when it comes to how to handle your personal real estate, especially later in life. So definitely something to be aware of. Keep an eye on understanding not only the tax consequences of one action or another, but also the legal consequences of one action or another.
The guide is titled Leaving a Financial Legacy, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. Again, it's titled Leaving a Financial Legacy. You can request it at ArmstrongAdvisory.com or by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Welcome back to the Financial Exchange, and happy Tuesday morning to all of our listeners out there. You've got markets that are attempting a turn here. The Dow, S&P, and NASDAQ, at least currently all in positive territory, but not by much, just clinging on here. The Dow up about 25 points, not even 0.1%. The S&P up 4 points. Likewise, less than 0.1%, and NASDAQ basically flat for the day, up 3 points. The yield on 10-year Treasury falling slightly to 4.416%. Price of a barrel of oil is just shy of $80 a barrel at $79.38 per barrel. And according to AAA, the national average for a gallon of gas is coming in at $3.60 a gallon. With New Hampshire and Massachusetts taking the lead on the lowest prices here in New England. New Hampshire at $3.50, Massachusetts at $3.55, Maine at $3.56, Vermont at $3.60, Connecticut at $3.68, Rhode Island sitting at $3.56, and just because I'm curious, because I'm going there this weekend, New York sitting at nearly $3.70 a gallon. Mark, anything interesting catching your eyes in terms of markets this morning? I'm guessing Macy's is still on a surge today after their earnings came out, although the stock is so small that I can't even readily find it on Google. No, stock's down 1% in early trading, so apparently people didn't like it as much as I thought it would.
This isn't going to make anybody feel better about the price of gas. I know it's a hot-button issue for some of you. But when you adjust it for inflation, and I know you're all rolling your eyes, the inflation adjusted, the CPI, which is the monthly, the biggie There are others, but CPI is the biggie. That's calibrated to the so-called price level in the mid-1980s. So that's your starting point. The value of the CPI today is like 320, 330. So it means prices have increased by 230 or so percent since the mid-1980s. So the price of a gallon of gas in deflated or inflation-adjusted terms today is 1.15. I hesitate to say dollars because it makes it sound... It's weird to compare fixed dollars, which is what an inflation adjustment does, to what you pay at the pump or wherever. But
gas is cheap, is what you're trying to say, compared to everything.
No, it's not cheap, Mike.
No, compared to everything else we pay for. Gas prices are relatively, compared to the 1980s.
So it depends on when your reference point is. If you came of age in, say, when I started working in the mid-90s, gas was really cheap then. It was half as much in inflation-adjusted terms. So in terms of what it consumed of your budget, it consumed half as much, all else equal.
Yep.
Now, fuel efficiency is better in cars and stuff, so that's not an entirely apt comparison, but you know what I mean.
Yep.
So if you came of age in the 90s, gas is expensive in real terms. If you came of age, though, you graduated college in the late, say, 2000s, gas is cheaper by about 15% than in real terms. I know this is a hot-button issue for people. You blame the president or whomever. You think we ought to drill. I concede that. But, inflation, gas prices in the early to mid 20 teens, so, 10 or so years ago, 10 to 15 years ago, about 20% more expensive in real terms than than gas prices are today. You do have to adjust for inflation, and this is not easy to do. You can't just do it on the fly in your head. It helps to have a calculator or a good chart in front of you. But depending on, again, when your impressions of what gas should cost were formed, gas is either outrageously expensive compared to the 90s and the 80s, late 80s and throughout the 90s, or not so outrageously expensive.
I mean, my general perception and my general feeling is that if I'm paying less than $4 per gallon,
we're doing all right.
I feel pretty good. When I get up over $4 a gallon is when even my little Civic costs, $50 to fill. That's when I start not feeling quite as good about the economy. But when I've got gas under $4 a gallon, I feel fine. And even when it goes above that, I just like to laugh at other people because then I'm filling up my Civic and I see the guy next to me in his F-150 that's paying like $150, so I laugh a little bit then. But I generally feel good about the economy.
It depends on the decade or even narrower period of time when you learned to drive and when you started paying for gas. Again, you think that's reasonable. You learned to drive, I'm going to say, sometime in the 2000s. I came in the very, very late 1980s. So gas, to me, gas was relatively expensive then in real terms. But if you're a baby boomer, you paid gas was free. You bought a pack of cigarettes. They filled up your tank. Like we couldn't. All you had to do was get a spade, drop it in the ground, spade shovel, and gas just flowed or oil just flowed. Like it was just a different America then. And so this to you seems obnoxious, and it's got to be somebody's fault.
Yep.
It depends on when your formative experiences, namely driving and paying for gas, I think occurred. That's my half-baked attempt at psychology of how people react to gas prices.
I like it. Yesterday on the show, Mark, we talked about, I think it was an article from Bloomberg or the Journal on the United States finally having some sort of cohesive policy when it came to China. And it was this three-legged stool to be able to compete with China. And the three legs were tariffs, subsidies, and I think what they refer to as national security restrictions. And I will admit that, today it does seem like those are the three areas of focus for the White House and Congress, for that matter, on competing with China in a new and different way from what we did a decade ago. Now there's a piece from, I believe this is the Times? Always hard to say. The New York Times on the U.S., led by Janet Yellen, the Treasury Secretary, on trying to get that fourth leg of the stool out there that I had kind of mentioned, which is getting your allies on the same side of this. But one of the things that we kind of struggled with yesterday was, okay, so yes, these are the goals that the White House and that the U.S. administration and generally, whether you're Republican or Democrat, are trying to roll out in order to compete more with China. But unlike during the Cold War, I'm having a really tough time understanding what the end objective is. And I don't think that has been stated.
What could it be? Is it containment? Is it to stop China from expanding via military?
I don't think it's regime change.
Oh, God, no. Have you ever heard?
Like nobody's called for that.
Topple the Chinese Communist Party.
But I mean, that was kind of the goal of the Cold War and Soviet Union competition was okay.
It depends
we
on
want
the
to
decade.
change the. Yeah, you're right. It was an ever-changing
We went from
target.
containment to détente, which was we're going to live with you, to Reagan saying you're an evil empire, we're going to overthrow you.
Yep.
And we basically outspent them, I guess, is the conventional wisdom on how that wrapped up. I've not heard anybody. I've heard containment talked about. And
Containment.
I think, that's where I think we're in the containment stage.
Yeah.
Which was the early doctrine that governed our relationship with the Soviet Union. So
Yeah.
it makes sense that we would try to replicate that because it worked. Only it took 55 years.
Mm-hmm. Yeah. That is the piece that I get concerned about because everybody talks about tariffs and all this money we're pouring into chips and that's. I understand how it works, and I understand even the economics behind it. I tend to disagree with a lot of it, but I can fundamentally understand the advantages if you live in an American manufacturing town to having tariffs and subsidies for certain industries for labor over the next couple of decades.
But Mike, sorry, but you don't let the people who are alienated because they're temporarily losing from economic. I'm going to call it progress. I know some people aren't going to like that. You don't let the losers from economic progress make the policy. You find out what the winners are doing and you allow more people to share in that. If we let the Rust Belt dictate economic policy in the 1980s, we would be far less wealthy, however you want to measure that, than we are today. It's just remarkable what cart is driving the horse here.
And that,
I know how
I understand.
Insensitive that sounds.
My
but I'm going to
point
say it anyway.
would be if you continue to implement these policies without being able to clearly define what your goals are, then I just don't really know where it stops, right? We've talked about the slippery slope of tariffs, for example, and subsidies, for example, right? We've talked about how, how do you judge the value of tariffs on vehicles and the national security implications there versus semiconductors versus healthcare equipment and cranes that are operating at ports. Without defining, this is what we are trying to accomplish, then I think where you get to is all of a sudden, we have to manufacture everything that we consume in the United States. And I think most economists, even those that really buy into the tariff narrative, would admit that that's probably not the best idea. And I'd love to talk more about this, but I just realized that I'm running into a break and we've got a guest coming on next. So let's take a quick break. We can revisit the China talk and the overall strategy right now when it comes to China. But when we come back, Dan Griggs from OceanFirst Bank Boston, he's going to be joining us next to talk a little bit about his bank's outlook, his personal outlook on the New England area and the nation's rest of 2024 when it comes to his view on where things go next. Quick break. Dan Griggs from OceanFirst joins us next.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning right here on the Financial Exchange Radio Network.
If you want to leave behind a financial legacy for your family, you need a proper estate plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. In our new monthly guide, we'll explore how and why the estate planning process is crucial to help you build a plan that will afford you comfort and peace of mind as you enter your retirement years. The guide is called Leaving a Financial Legacy, and in it, we'll unpack ways to create a plan that takes into account your entire investment portfolio and your business holdings, including real estate. We'll also explore strategies on how to mitigate your risk from long-term care costs, which could affect you in the future. Call right now at 800-393-4001 to request a copy of our new guide, Leaving a Financial Legacy. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating the right estate plan to help secure your future takes effort. There are plenty of mistakes that you can make, any one of which could have a dramatic and damaging effect on your financial strategy. Cushing & Dolan are experts in estate planning. Their brand new guide is called Detour Ahead, Estate Planning Blunders to Avoid. In it, you'll learn about these critical errors so that you can make the right decisions to always protect your assets. As an example, if you've created a trust more than 10 years ago and haven't updated it since, you're setting yourself up for problems. Cushing & Dolan's new guide will help you address issues like this. So call right now, 866-848-5699, and ask for your copy of our new free guide called Detour Ahead, Estate Planning Blunders to Avoid. That's 866-848-5699. Or request it online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race is Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. Help us support these great American heroes by visiting dav5k.boston and registering for this year's race. Your gifts will support a wide variety of initiatives like the DAV Transportation Program, which takes disabled vets to important medical appointments that supply both the physical and mental care they need. For more information or to make a donation, visit dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Dan Griggs, president of OceanFirst Bank Boston, joins us now to talk a little bit about the local economy and what's been happening on the national stage so far this year. Dan, thanks for coming on. Appreciate it.
Good morning, Mike. Glad to be back.
So I would define this year as being somewhat surprising in terms of the inflation narrative, with some bumps in the road as the Fed has gone on to describe the first, let's call it, 4 months of inflation data that we have received so far in 2024. And I guess, Dan, when you look at what's happened so far in 2024, how does it diverge from your own expectations for what we were likely to see this year? Obviously, last year we were coming off some really solid economic data, and it was a bit of a pivot so far this year. What was your own take on it?
I would agree with that. It was a bit of a pivot. I think in Q4 of 2023, the trend had been inflation was cooling, and that's why early in the year, the market priced in 7 rate cuts at the beginning of the year. There was certainly a blip in inflation in Q1, but then we saw in April that it started to come back to, it was 3.6. It's still above the target at 2. And the market has currently priced in 2 rate cuts through January of 25. And even the median Fed projection is around that through the end of 2024. With that said, though, the economy stays strong. GDP is looking at 2.2 for the year. Unemployment, as we're looking at full unemployment, is defined as 3.5 to 4. In April, it blipped up to 3.9, but it's forecasted at 4% through 2028. And that just kind of, people have gotten used to where the rates are at. Companies, both Wall Street and Main Street, our customers, are having sustained profitability, which means CapEx investment.
Yeah, and I think certainly for large companies, as with many American households, they just haven't been impacted all that much by higher interest rates. If you're Apple or Microsoft, you've done a lot of your borrowing ahead of time, and it doesn't need to be done at this stage. Would be at least part of my take on that.
I would agree with that. And the other interesting stat I saw from Redfin is 90% of existing homeowners have a rate below 6%. 82 is below 5, and 62% of existing homeowners are below 4%.
So one of the concerns I have, and I think the Fed probably shares this concern, is that the longer that rates stay this high or higher, every month that goes on, you probably increase the probability of some breakage showing in the system, whether it's a commercial loan going belly up or something that's not even showing itself, some crack in the foundation that we're not aware of yet. Are you starting to see any of that? What areas are you looking at to see, will this economy eventually break under the influence of higher rates?
Yeah, I think the two biggest risk factors, I think, to the economy are certainly oil prices and a spike. You guys were talking a little bit about that earlier. But commercial mortgage maturity risk is a risk to the current economic state. There is $1.2 trillion coming mature through 2025. And so are those properties able to get refinanced and cash flow at the new rates versus maybe where they were underwritten to? That's, I think, mostly a concern is in office, but outside of downtown office, suburban office has performed fairly well. So it's a risk. I don't know if it's a high risk, but it is certainly a risk.
When you talk about the Boston area, and let's just include the New England market in general, obviously a city in Boston that is heavily dependent on the tax flows from commercial office space. How would you judge the health of this New England economy right now?
I would judge the health fairly good, notwithstanding, I think the office, back to office is okay. It's fine. Our vacancy rate in office is around 20%, a little higher than national average, but it's okay. The key to me and driver for 2024 is tourism. Tourism is the third largest industry in Boston and in the Commonwealth, and I think it's trending up. To understand, though, tourism, you have to look at the historic segments. International tourism dipped 82% between 2019 and 2021.
Sure.
Now, Meet Boston, the city's visitor bureau, is projecting international visitors this year at 2.6 million, which is just under the pre-pandemic level of 2.7 million. On top of that, Logan Airport international travel is up 12% through Q1. So I think that all bodes well for the local Boston economy. And our hotel operators locally are telling us advanced reservation bookings are up year over year as well.
Excellent. Dan Griggs from OceanFirst Bank Boston joins us today to talk about the state of the New England and national economy. Dan, thanks so much for joining us. Appreciate it. And we'll talk to you again soon.
A pleasure. Thank you, Mike.
All right, time for trivia here on the Financial Exchange. Well, today is Mr. T's 72nd birthday. The star of the A-Team in WrestleMania 1 was a wildly popular celebrity back in the 80s. The A-Team was one of the highest-rated shows during its run on NBC. And WrestleMania 1 was watched by over 1 million people on closed-circuit TV. Before the A-Team and WrestleMania, Mr. T gained fame as the antagonist of Rocky Balboa in one of the Rocky movies. Trivia question today, which Rocky movie launched Mr. T to stardom? Once again, which Rocky movie launched Mr. T to stardom? Be the fifth person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt. Once again, 617-362-1385. And the fifth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
In our weird and creepy AI news of the day, did Tucker and Mark, you see the story about Scarlett Johansson and OpenAI?
Mm-hmm.
So if anyone missed it here, OpenAI just last week, I think, rolled out a kind of like voice system on their AI system in order to eventually compete with the likes of Amazon's smart home device and Google's, which I won't name here. Apparently, OpenAI had approached Scarlett Johansson on several occasions trying to get her to voice this thing. She declined on many of those occasions. They rolled it out, and it sounded exactly like her, Scarlett Johansson, and her from the movie Her, about this exact thing of somebody falling in love with an artificial intelligence. So her lawyers apparently sent them some sort of letter asking how they developed this voice and why it seems to sound exactly like her. But I have to say, like, every week that goes on, there's just more and more pending lawsuits on all of this stuff.
Their mistake was asking for permission.
Quick break. We'll have the trivia winner when we come back.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line. We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have debt destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Leaving a Financial Legacy. Mike, one of the areas where we see a ton of confusion these days is with retirement accounts and leaving them to the next generation. It's just a complicated place right now.
Yeah, and to start, some retirement accounts were actually looked at by some as a really successful planning tool for generational planning, especially when you talk about Roth IRAs, for example. And the rules around that all changed just a few years ago. And so really understanding the taxation of these different assets is important when it comes to leaving a legacy.
When we talk about what goes into those retirement accounts, this has to be part of the thought as well in terms of minimizing taxation during your lifetime and that next generation's. You have to coordinate what's inside of them just to minimize the taxes during that time as well.
Yeah, so from that perspective, you have non-taxable assets like a Roth IRA. You have taxable assets that generate a 1099 every year. You've got traditional IRAs and 401ks. All of these have very different rules in terms of how they're treated, but the biggest change had to do with retirement accounts, specifically 401ks and Roths, and the rules that impact beneficiaries of those assets. And so if you're trying to utilize them as a legacy plan, important that you understand the new rules.
Our guide is titled Leaving a Financial Legacy, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia question today was, which Rocky movie launched Mr. T to stardom? That would be Rocky III. Mr. T was discovered by Sylvester Stallone in 1980 when Mr. T was competing in the America's Toughest Bouncer competition. Stallone cast Mr. T in a limited role as Clubber Lang, but expanded the role upon seeing how well Mr. T was acting. Winner today of the Financial Exchange Show t-shirt was Buffy from Chicopee, Mass. And we play trivia every day here on the Financial Exchange. Tune in tomorrow for your chance to win. See complete contest rules at financialexchangeshow.com.
Congratulations, Buffy. I'll also say congratulations because that's not a name that I believe has ever won trivia before. I like,
maybe it's an alias.
We get too many Marks and Mikes and Thomases, and it's nice to see a Buffy winner. So congratulations. We were talking before the break, Mark, about the United States trade approach to China, and they seem to be approaching China with this 3 or 4-legged stool when it comes to trade tariffs and subsidies for U.S. industries and national security restrictions. And I've added my own 4th leg, which is if you actually want any of this stuff to work, then you also need to attach this bilaterally with Europe and probably India if they're going to enforce this type of stuff and not allow China to dump products on their markets. But what I mentioned before the break was that
Wait, is the purpose to nurture our own green industry? If so, it doesn't have to be multilateral West against China, right? What is the objective? You hinted at this question in the earlier segment. It depends on the
depends
objective,
on
right,
what the
Mike?
objective is. Yeah, right.
Our objective is not to suffocate China. I don't think.
I think that the objective, based on what I hear over and over again, I'm just kind of trying to perceive this, is to convince China to change some behaviors. And the behaviors that I think the West finds most objectionable would be not respecting intellectual property rights, dramatically subsidizing their own industries and dumping product on the open market, and probably in many places employing the use of slave labor and human rights issues that we would consider objectionable. Those, I think, are the behaviors that, if I'm trying to list them outright, are the ones that the United States is trying to challenge. I don't think they're trying to make a big point of, we don't like that it is an authoritarian regime. I don't think they're trying to change the communist government there, but I think they are trying to change the behavior of those that are in charge.
I bet if you ask most people, though, they'd say they would think or want or believe the objective of tariff policy, because we've been in a trade war, a quasi-trade war with China since at least 2018.
Yep.
Biden has continued the Trump tariffs. He was a little ambivalent on that point, but he's largely continued. Then he's upped the ante recently.
Yep.
And Trump's going to double or triple or more than that down should he win. most people would think the objective is or should be protect American industry. I think that's the traditional justification for tariffs, to protect either an infant. They used to use the term infant industry. You could use that with respect to green technology. Those other goals, human rights, etc.,
intellectual property, things along those lines.
Yeah, those are long-running disputes that we have. We've had squabbles with them on those areas for decades and haven't imposed tariffs of anywhere close to this magnitude. So I think this is probably about, and most people would expect it to be about, protecting green industry.
I don't think the same. I mean, let's be clear about some of these things. Green industry has no place in the semiconductor policy that's gone into place here. That seems to be a national security concern.
Right, but
solar panels.
Are we talking about tariffs on Chinese chips, or are we talking about tariffs on?
We're talking about the three parts
cars?
Of all of these things,
we're talking
which
about
is
the whole
tariffs,
I'm talking
national
about
subsidies, and all of these different pieces are. Again, the piece that really concerns me about it is I just have no idea what the end goal seems to be.
But listen to the first paragraph in this article. This is the Financial Times coverage of it.
Yep.
Yellen has urged the U.S. and EU to join together to clamp down on green tech exports, warning that a glut of cheap Chinese goods could threaten survival of factories.
Right.
So this
on that
seems
specific
to be,
subset, you're right.
Which is the
It's
article
all
we're
about
talking about today.
Protect Western investment in green energy, which if your
now
goal,
how do you feel about it?
If your goal is to right, and that's where this gets so wishy-washy, right? If your goal is to reduce greenhouse gas emissions across the globe in the fastest way possible, manufacturing that stuff in France and the United States is a stupid idea. If that's your stated objective, which I think at least, the EU and the Biden administration have been pretty clear on. If your stated objective is we want to dramatically increase green energy and reduce greenhouse gas emissions, then you should be importing that stuff at the cheapest price possible from China and putting all these U.S. industries out of business. That's just clearly not what they want to do.
And that would be
Instead,
good for consumers, too. It would mean cheaper.
It would mean cheap solar panels and all that stuff.
And
cheaper
good for inflation
energy as a whole.
in the short term.
But yeah, clearly not the road it's going to, and that's why I get so confused by some of these.
This
things.
is why
there's no coherent.
This
policy.
is why people think. Go ahead. I'm sorry. Do we have to break for something?
No, you're good.
Okay, I saw everybody sort of.
I did nothing.
Sit back. Oh, okay, maybe I'm.
Yeah, you are.
Maybe I'm seeing floaters or whatever happens after 50. They all look like you, apparently, Tucker. My floaters look like you.
Just floating Tuckers.
Jeez. So maybe that's why people are confused about Biden's economic accomplishments, and I put that term in quotes because those are in the eye of the beholder. This policy is incoherent.
Yeah. Lowe's coming out after Home Depot's report last week and beating estimates but not being rewarded. The stock's down about 3% in early market trading. Their comp sales were considerably worse than Home Depot's. I think comp sales at Home Depot, comparable sales are sales at stores that have been open for at least 12 months, so you can compare them to the year before. At Lowe's, they were down 4.1% in the first quarter. That was better than expected, but still not great, and I think a lot of that's coming from the fact that they rely a lot more on the everyday consumer rather than the contractor. This has been an area that Lowe's has been trying to catch up to Home Depot on for quite some time, and has been making progress, but not as much as I think they would like internally. And what we saw with Home Depot was management there saying, look, when it comes to the average consumer, what we're hearing is that they don't want to make these big investments right now. They're pausing all the big home improvement projects and not investing quite as much as they were in years past out of whatever it might be, concern for the state of the economy, concern for the cost of borrowing, but for whatever reason, not investing quite as much. Lowe's initially was up in pre-market trading after this report, but has since taken a bit of a hit. And like I mentioned, stock now down 3%. Another historically big retailer, Macy's, reported earnings as well. And I have to say that, in my mind, kind of irrelevant these days. I don't know. Actually, let me ask either of you, and I know the
answer's no.
The male demographic is not exactly the right group for this, but when was the last time you walked through a Macy's for a reason other than you parked closest to one?
To use the bathroom? Is that another reason?
Yeah, that counts.
Right.
You had your son with you and needed to go find a toilet.
Just me.
Yeah,
I don't know, 97, 98 maybe?
Yeah, like genuinely, the only reason I can think of that I have walked through a Macy's.
No offense to Macy's.
Oh, you know what?
It's pretty offensive to Macy's.
I did go there last August.
You did?
Yeah, I just wanted to check out something.
Okay.
Shirts.
Why are you being elusive? What'd you go to check out?
Yeah,
shirts.
Let's be
a little
clear.
sketchy.
Shirts.
Yeah.
Did you buy anything?
I did not.
And like the one you're wearing now, where'd you buy that?
This is a rollback.
The internet.
The internet. Yeah.
In either case,
this is why none of us are spending a lot of time in Macy's. It's too easy to buy stuff online. Stuff may not look great. It may not fit right, but
as he points towards Tucker.
Yeah. Exhibit A.
I forget this is radio. You can't
that's
I have
pretty
any experience
good.
in any other medium either. But
Macy's earnings right now are being hit with the backdrop of the fact that there is a $6.6 billion buyout offer from an activist investor, Ark House Management and Brigade Capital Management. The market cap on Macy's right now is only at $5.2 billion, but the new CEO has been trying to push off that buyout offer and turn this company around. But I don't know, quite honestly, when I look at his turnaround story, it's we're going to close some unprofitable stores. We're going to focus more on our upscale Bloomingdale's, and we're going to be expanding our high-end skincare.
Haven't they been saying this for years?
Yeah, that's what struck me is there's
Sounds
nothing
familiar.
innovative here.
Sounds familiar, yeah.
There's nothing new that I'm hearing from Macy's. There's nothing here other than we've got expensive real estate. Let's kill the stores that aren't working and focus on the ones that are. And that could work. Don't get me wrong. It's just not any different from any other brick and mortar turnaround story that I've heard over the last decade.
That was my reaction too.
Let's take a quick break. When we come back, some stack roulette here on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. The U.S. Virgin Islands is the perfect destination for your next vacation. Visit St. Croix, St. Thomas, or St. John and experience incredible weather, iconic history, pristine beaches, world-class cuisine, and a vibrant nightlife. Book now and you might just make it in time for the St. Croix Mango Melee on July 7th. The family-friendly event offers food demonstrations and tastings, cultural dance performances, and the ever-popular mango eating contest. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
There are crucial mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
A recent report from LawDepot.com says that only 3 out of every 10 adults in the U.S. have taken the time to create an estate plan. Don't be a member of that group. Hi, this is Mike Armstrong from the Armstrong Advisory Group. A sound estate plan can give you control over your assets and peace of mind as you enter your retirement years. Our new guide is called Leaving a Financial Legacy, and in it, we look at estate planning from a financial perspective. It's important to have a strategy that addresses your investment portfolio and all of your holdings, including real estate. We'll also focus on other issues, such as how to manage long-term care expenses that may affect you down the road. Get your guide today by calling 800-393-4001. That number again is 800-393-4001, or you can also request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer. with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
It is time for a bit of stack roulette here on the Financial Exchange. Mark, what do you have for us today?
Good news from Target. If you shop there, they've slashed prices on more than 1,500 popular items, beginning now, immediately, from butter to laundry detergent. Strange combination, but...
Yeah, I guess this might get some people in the door. It's following a trend that I've seen from a few companies. One, I think it probably is in the wake of Walmart's earnings, where they found that they didn't say it explicitly, but my interpretation was we are eating Target's lunch here because we've been attracting a whole bunch of consumers making over six figures. No pun intended there. Walmart in their earnings said, yeah, look, because of cost-conscious consumers, we are seeing a lot more people in the six-figure income range coming into our stores and shopping here, especially in the grocery space. And Target, I think, is what's the opposite of a beneficiary? The direct loser.
Benefactor?
The direct loser in this situation.
I was thinking the other end of the transaction.
The other place that I'm seeing this, I know Wendy's and McDonald's also are having seeming issues with what I have to describe as like brand issues, right? I mean, if you're not already, as McDonald's, viewed as the cheapest option out there to grab a meal, then you're doing something wrong. But Wendy's saying that they're going to start rolling out a $3 breakfast menu, and McDonald's doing something along those lines as well. And just surprises me. I mean, Target is a different type of beast. I don't think they are kind of looked at as that key discount store, but that seems to be what people want right now. And for whatever reason, the traditional names of discounters that we think of, like McDonald's and Wendy's, like I think of those as rock bottom in terms of pricing if I want to go grab a meal. And they're even having a tough time attracting consumers right now based on pricing. So I just find all of that a bit intriguing in terms of corporate strategy right now.
Higher level. So again, Target's cutting prices today on about 1,500 items, thousands more allegedly over the next few months. My takeaway from this was prices are really sticky. It takes certain prices a while to come down. Some prices move day to day and throughout the day. Gas is a good example. You see the numbers changing on price boards or whatever they call those signs all the time. Other prices take a long time to change. They're either set by the calendar or just periodically when management makes a decision. And this is one of the reasons why inflation takes time to get under control. Certain prices adjust fast. Most do not. Thus, average prices have some persistence, both up and down. This may be a gimmick from Target. We're talking about it. People are going to remember it if they happen to be listening or scan any of the number of... There's articles on every major news outlet about it. So from a PR perspective, it was brilliant. Is it going to make a dent in inflation? Probably not.
Yeah, like how much of a discount are we talking here?
They give, of course, the most...
Yeah, very generic, very general.
Most sensational examples.
But I'm playing to your point. There's like the headlines out there now.
Right, headlines out there. But I will say, if... in and of itself, Target cutting prices on 1,500 items has, I agree, zero impact on inflation. However, if we take all of these stories together, and the common theme to all of them seems to be that corporate executives, whether they're willing to cut prices in reality or not, seem to think that consumers are being more discerning on price right now. Right, that's the takeaway that I would have.
That's the chatter.
Right? Like that's whether or not they're truly going to bring down prices and whether or not it's actually going to lower your overall bill when you go into a Target, up for debate. What I don't think is up for debate is the fact that Walmart, Target, McDonald's, Wendy's, Starbucks, all of their CEOs have mentioned this in one way, shape, or form, that, oh, yeah, consumers finally starting to care a little bit about price and pushing back on high prices.
They all hear the
here.
same thing from their consultants.
Yeah.
They're not actually
right, they're all hiring the same
eavesdropping in
company.
stores. Hey, who's that guy? Who's that well-dressed fella in the Clorox aisle?
Yeah.
Oh, that's the CFO.
But
gathering
if
intel. No,
if
that's not
there's
how it
any
works.
truth to that, I think that could be a very good news story for inflation. We won't know for some time, but if there's any truth to that, the consumers are finally being a bit discerning
well,
with their money.
You don't want to see. I mean, prices aren't going to fall. They only fall in sharp economic downturns in the modern era.
Moderate. Right?
Yeah,
Will they moderate?
Yes. Yeah.
That was one of the takeaways. I have just a kind of funny and bit of a goofy commerce story here. So the cannabis industry, if anybody is not familiar, in the states in which it is legal. Yeah.
Anybody who's not familiar.
Yeah. The rules that govern this, because it is federally illegal, make it so that in each state where it is legal, you have to have an industry that basically survives on its own with no interstate commerce. So, little old Rhode Island, which has, I believe, legalized cannabis, has to have the retail
stores. What are you looking
stores.
at me for?
Rhode Islander has the retail stores. They've got to be able to grow the product there. Whereas if you are selling alcohol, for example, you probably wouldn't do that entire industry within the border of Rhode Island or Massachusetts, for that matter. The other tricky factor here is not only can you not ship across state lines, but let's say you need to maybe enter waters. Even if they are the waters of the United States, once you get off the coast of Massachusetts, you might be entering into U.S. territory, waters that are outside the control of Massachusetts. And so if you are trying to ship weed to Martha's Vineyard or Nantucket ahead of the summer, presumably pretty demanding season, you've apparently been running into a whole bunch of problems because the Coast Guard is going to seize your ship and seize all of your product.
You can't
and
just hug
shut
the
it
coastline?
Down. I don't know. I am not a navigator between the Boston port and the Martha's Vineyard port. If you can just hug the coastline and dodge that one, but the Cannabis Control Commission has been trying to address this, but effectively, I think the piece that really matters here is the Coast Guard reiterated in an email to the Boston Globe that in U.S. waters, quote, the transportation of a significant amount of a controlled substance, regardless of its form, is illegal, which has to mean, by the way, that basically any marijuana that was ever purchased on Nantucket or Martha's Vineyard had to have been illegal, right? Because other than a tiny amount,
there was illegal. Is it illegal once it gets there? I'm posing questions that are rhetorical.
Not
this
for
is
the
not helpful,
purchaser, but probably for the seller.
because they should have known.
Yeah, if you control a retail store there and you're getting a whole bunch of product and you live and own your store on Martha's Vineyard and you're just kind of closing your eyes and saying, I wonder how they got all this here, then yeah, you've probably broken the law, would be my guess.
Never thought about that.
What a weird situation. So, if you're visiting Martha's Vineyard or Nantucket this summer and I guess desperately need to find cannabis, the answer would be do so before you get there, I guess.
But how can you transport it there? Same issue, right?
Yeah.
Or is it for sale? Transport for purposes
No, I would
of,
imagine if you got caught somehow transporting cannabis on the ferry,
can you go to
then
Logan?
You could get in trouble.
Can you go to Logan? Is there a plane service tomorrow? Yeah, there is. There's plane service to the Vineyard.
No, you would probably get in trouble for that, I would imagine.
Okay, sorry. I don't know. I've never tried it.
I haven't either. But those dogs seem pretty serious. Let's take a quick break for the next 22 hours. We'll be right back at it tomorrow. Markets are basically flat. We'll have a full market recap tomorrow as well. Have a great afternoon, everybody. Enjoy the fantastic weather, and we'll see you then.
This is Tucker Silva of the Financial